Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Monday, March 17th newsletter. By the way, happy St. Patrick's Day everyone. Here's an image I generated with AI. I basically asked it to generate a St. Patrick's Day theme on Wall Street, and that's what it made. It's pretty cool, this tool. Anyway, as you can see, this newsletter is divided into 8 major sections. Nice follow through today on the market from Friday's rally and of course the trade low last Thursday. And anyway, got a lot to discuss. As you know, in this market sell-off, we had quite a few of the mean reversion systems scaling into the long trades. It was not fun. Those of you who did those trades, including myself. Anyway, several of those systems exited today, some of them nicely profitable, some of them still hold. So I'll discuss that. I'll discuss my overall thoughts on the market. And again, we got a lot of other items this week as well to discuss. Again, my name is Matthew Fraley. I founded Breakpoint Trades 22 years ago, way back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and my personal passion, mechanical trading systems. If you're just a YouTube subscriber, the last video I did was just over a week ago. Since then, we've had 5 detailed newsletters, and that's a reason to subscribe to our service, because then you get access to our 5 detailed week newsletters per week. You get actionable trade ideas, you get our active community, and you get alerted to our awesome mechanical trading systems. Anyway, let's go and get back to this video newsletter at hand. So this week, again, nice bounce, like I said, from the lows last Thursday. This week, we have several key reports. Retail sales on Monday, which we had, and they came in weaker than expected, not surprisingly. Jensen, Huang, NVIDIA's keynote address is on Tuesday, so we'll see how the market reacts to that. And of course, the big one this week is FOMC and Powell Speech on Wednesday. And of course, always wise to stay on top of Trump tweets, etc., because those can move the markets crazily anytime. Like I said, last Wednesday, March 12th, I commented that the market might need one more push lower to set up a 60-minute MACD divergence for a better bottom. And you know what? That's exactly what happened on Thursday. Then we started the rally on Friday. For now, I view this bounce as either a wave B bounce or a wave 2 under a bearish view. For now, I'll go with the wave B bounce. Either one should ultimately form a lower high, okay, and unfold in some sort of ABC bounce before coming back down again. Again, another option would be that we've put in a low and we're going to go back to the highs. I don't favor that option, so I favor some sort of lower high once this bounce is done. But because the sell-off took 3 weeks, overall this wave B or wave 2 should probably take at least a week and a half or so to conclude. Okay, and let's go and move on. So before we get to the charts, just show you really quickly. So image number 2, here's that 60-minute chart that I discussed in my newsletter last Wednesday. Remember I said that bounce, we were quite oversold, but I said kind of had a bear flag look. And I said ideally one more sell-off that wasn't too deep could form a good MACD divergence. And that could set up a decent trade low that we hadn't had that whole decline. Well, that's exactly what happened. We made a slight new low on Thursday, and that ended up setting the bottom. Then we rallied on Friday, and then nice follow through today. So that is playing out. And finally, image number 3, here's a half-day chart. So I went ahead and labeled this. Again, don't pay attention to the time frames here I have. I'm just illustrating this. So we've had this waterfall sell-off since the highs in late to mid-February. Okay, I view that either as a wave 1 under the bearish view or a wave A. Okay, so for now, I'm going to view it as a wave A, but under that scenario, we get a lower high rally is a wave B or a wave 2 that should be some sort of 3-wave structure, such as an A, which we're working on now. Then you get a pullback fairly soon. It could start tomorrow. We could follow through more and then pull back. Either way, eventually we're going to have a nice pullback as a wave B. Ultimately, that should be another buying opportunity, then yet another move up in a C. Maybe we retrace 50% of the move, the decline, maybe even a little bit more. Then I think we come down again. That's my favored view. Okay. Next, let's look at some of these mechanical trading systems, specifically the mean reversion systems. As you know, during this sell-off, we've had these mean reversion systems. Remember, there's 22 of them. Start to scale into longs. Some of them were quite early, like the trend pullback, which you see here on the far left. We had the QE which took 3 entries. That is continuing to hold. We had the CCI divergence system, which closed out today. Now, the first and second entries were losers. The third entry was a winner. But remember, these are leveraged. So the first entry is based on the SPY, the 1X ETF. The second entry is the 2X ETF. The third entry is the triple ETF, which is UPRO. So that UPRO made up at least for a good, more than half of that decline or the losing trades there. Now, the bull exhaustion, which on the far left, that entered very good. And that's a rare system. This is only triggered around 14 times in the last 30 years. So it's a rare system that, as the name suggests, you're generally still in a bull market, but you've had a very strong waterfall sell-off. And, obviously that's what we've had. It took a first and second entry, very good entries. Both of those very nicely profitable. They closed out today. Now on the MES futures side, remember we also run the systems on ES futures. So the CCI is still open. The QE BTS is still open as well. And the bull exhaustion also had triggered on MES futures, and that closed out today. That said, guys, tomorrow morning on the SPY side of things, the QE BTS is exiting. Okay, it exits in the morning. That said, I have 2 versions of the system. One that is exiting and one is going to continue to hold. Because I do think ultimately the market has more rally to it, I'm going to split the difference here. We're going to exit half of this position and keep the other half for that other version of the system. Okay. Now let's take a look at the trade tallies so far. So image number 5, this table shows you this mean reversion systems for SPY and MES futures. So at the top here are the SPY system trades this year so far. There's been 12 of them. And you can see what is still open here, QEBTS, trend pullback. And remember, tomorrow QEBTS is exiting 50%. So bull exhaustion made very nice gains. $400 on the first entry, $1,120 on the second entry. On the CCI divergence, the first 2 entries were losers. The second entry was a winner. Okay, so just with what's closed out right now, ultimately they're still profitable for the year. Obviously, there'll be some loss on the QEBTS tomorrow, but again, we're not closing out all of it. And the trend pullback is still staying long this as well. Now, on the MES side of things, by the way, guys, the futures contract is rolling over this week to the June contract. So if you still hold March contracts, which is MES H25, you need to roll them over to the June contract, MES M25. Anyway, today the bull exhaustion exited. First entry made $700. Second entry made $28.80. So that's awesome gains there. The CCI divergence, QEBTS, of course, are still open, and they are not going to close. They are still ultimately down, but should the market work higher here, like I think, these could come back pretty nicely and ultimately have really nice gains here. So far what's closed out are up nicely. Okay. Next, back to the general market. So item number 6 shows the index sector table, what transpired today. So you can see nice gains in the major indexes. The Russell led today up 1.25%. NASDAQ 100 lagged. A lot of the big cap tech stocks, the FANG stocks in particular, Amazon and Meta and all that, they really, really lagged. Tesla was down, so it was only up 0.3%. S&P up 0.64%. Dow up 0.85%. But the Russell led. And as far as the 21 market sectors, broad-based rally. All 21 sectors were up today. Currency-wise, US dollar still remains weak, down another 0.4%. Bitcoin, cryptocurrencies bounced back today a bit. Commodities, mostly to the upside, almost all of the upside. The only downside I see is natural gas here. Otherwise, everything was up from the index to crude oil, copper, uranium, corn, wheat, coffee, you name it. Precious metals continue to rally. Remember, gold's now over 3,000 an ounce. I gave that target over a year ago. That has played out. Silver is 34.30. I have a target around $50 this year, and GDX, the miners, up 2.1%. They're just killing it. As far as the bond market, we continue to see a pullback in the 10-year, 30-year Treasury yields. Remember, this week Powell speaks on Wednesday. Item number 7 is the economic news calendar. Like I said, the real big item news this week is the FOMC and Powell's discussion on Wednesday. And of course, remember to always keep an eye on Trump's tweets and social media, because anything he says can also move the market. Okay, let's go and jump to the charts. First chart below, item number 8 is the quarterly chart of the S&P 500. Again, I know it's only Monday. I'm just showing you this because last week's lows, as you can see, tagged that 5 EMA. That's the gray dotted moving average here. And we tagged that and bounced off it for now. Ultimately, though, I think this needs to unwind this year. You can see how stretched this quarterly chart is. You had a doji last month in February, and of course this month. So ultimately, I think this needs to revert this year. Maybe on the next sell-off that we get, maybe the 9 quarterly EMA will be tagged. Okay. Next, chart number 9. Here's the weekly chart of the S&P with this wave count that I've been favoring since last year. If you go back to my newsletters, I talked about we're eventually going to get a pretty good sell-off in the market as a major wave 4. This still ultimately illustrates a bullish case. Okay, there are bearish cases where we have major highs in place, but this would still be the bullish case. And I said, under the bullish case, major wave 4 could be 500 to 900 points. Well, we've had the first leg down of it. So if we have an initial trade low here, I'm looking for a rally, but that ultimately forms a lower high. Okay, so I think we got more meat on the bone still, but then ultimately should fail. Then come down again. Maybe it comes down to the low 5,000 area. Maybe 5,100, 5,200, 4,900 would be some potential targets. Then I think we got a pretty good trade low, to have a better swing from. Image number 10, here's another weekly view. Just showing another alternative, how maybe the rally could ultimately stall at that trend line up here. Okay. Next, chart 11, here's the S&P 500 KISS system. No changes here. It's still flat. Remember, this exited a couple weeks ago. Again, the KISS system did its job, guys. This is the daily version of the high performance. Yes, that last trade was a loser, but it had really nice monster trades before that. It kept you in the uptrend. And it got you, it stopped out. It did its job, and it kept you out of that big plunge. Not all of it's not ever going to get you out at the highs, but that's the point of the KISS systems. It's kind of like insurance. If the market completely falls out of bed, it's there to get you out, so you don't have to ride it down. Next, image number 12. Here's the 4 time frames with our custom indicators, ATRs, moving average ribbons, DeMark. So we had a DeMark 13 low last week. Moving average ribbon was very wide, so you can see we've bounced from there so far. We're below the ATR, obviously, on all these time frames, except the 78-minute, which we slightly pierced here. Little DeMark 90 in the day, but notice the ATR down here at 55.80. That could now be a potential support if we pull back. I am looking for a pullback here to add to longs. Next, moving back to the standard chart, chart number 13, here's the daily S&P. Like I said, last Thursday, we came into that demand zone, rallied right off it. We had a little RSI divergence there. And so far, we closed right at the 9 EMA. That's the first mean reversion move. You have the 200-day moving average above, which is, I think, will tag at least the underside of that. But otherwise, under a true wave B or a wave 2, we should get higher than that before coming back to new lows. But that could be a first sticking point. Next, chart number 14. Oh, I meant to remove this chart. This is the chart I was showing last week where I was looking for a pullback and new low to form a better divergence. But anyway, let's move on. Chart number 15, here's the half-day chart, and I illustrated what I'm looking for. So That initial big waterfall sell-off, either a wave 1 or A. I'm looking for this rally to form a lower high, some sort of ABC, wave B or 2. Ultimately, I think it should last a week and a half or so. You know, the rally down, the sell-off was about 3 weeks, so this should be at least 1.5 to 2 weeks, just under a time symmetry. Lower high, maybe get up to 50% fib or a bit higher, then come down again. Chart number 16, here's that 60-minute chart I discussed early on, which played out for my March 12th comments, where we sold off, made that slight new low, setting up a brilliant MACD divergence, before then having a powerful 200-point rally off the lows. By the way, this is the largest rally in the downtrend, so let's say bullish symmetry break. So that favors higher low on the next pullback. Chart number 17, here's a 30-minute chart. Like I said, we cleared one of these channels. Nice rally up. The next resistance would be this downtrend line just above from the February 19th highs. And chart number 18, here's a 15-minute chart illustrating the gaps. These gaps are potential magnets over time. Now, we do have a big open gap below, which is ultimately going to be filled, but I don't think right now. You can see late in the day we got close to the open gap above from the previous week, but didn't get into it. Started pulling back late in the day. There's a demand zone down here, which if we pull back into here tomorrow, I'll be looking for a potential buy trigger into there. Next, moving on to the NASDAQ. Here's the triple Q's high performance KISS system. Again, it's still flat. Remember, this got out over 2 weeks ago at a very excellent price, right around 518.50. So got you out really good there and avoided a good 60-70% of that decline. Did its job. Chart number 20, here's the 4 time frames. Again, very similar look to the S&P charts, quite honestly, so I'm not going to discuss this in any more detail. Next, chart number 21, here's the daily chart. This wedge pattern clearly played out that we had drawn weeks ago. Sell off into this demand zone where so far we've bounced. So far just bounced back to the 9 EMA. Couldn't close above it. We closed right at it. Chart number 22, here's a 2-hour view, just showing the waterfall sell-off. So far this rally, the largest bounce in the downtrend, and that last low from last week set up a nice little MACD divergence. Since this formed is a symmetry break, I do look, if we pull back from here, I'm looking for a higher low. Here's some fibs. You can see we got around the 23.6% fib today before pulling back. You can see where the other fib levels are above. And chart number 23, the 60-minute chart, showing the downtrend, breaking the downtrend channel. Chart number 24, 30-minute chart that I was showing last week. Again, we broke out of that channel on Friday and followed through today. And here's another 60-minute chart showing a very nice clean channel. Again, we formed a nice MACD divergence last Thursday, broke out of this clean channel. Again, really super clean channel. Got up to the 23.6% fib today before pulling back a little bit. Ultimately, I think we'll reach to one of these higher fibs before we top out. And chart number 26, here's the 15-minute chart, just like on the S&P, but for the NASDAQ, you can see the open gaps. We got a little bit of that gap up here before pulling back. Next, let's look at some of the big cap tech stocks, because these are really what lagged today. So Tesla here was actually down 4.8% today. Remember, I've been calling that last low is a wave 3 of 5, not the low. Okay, so the bottom on Tesla is not in, guys. All right, now it doesn't mean we can't form a little higher low and push higher, but ultimately I'm viewing this as a wave 4 of some sort. Ultimately, I'm sorry, Elon, Tesla will ultimately go lower. Next, chart number 28, here's NVIDIA. Again, NVIDIA was actually down 1 3/4% today. It opened right at the 20-day moving average before pulling back. Again, nice logical bounce off that demand zone. Remember, we have the keynote speech from Jensen Huang on Tuesday, so let's see how the stock reacts to that. Chart number 29, Amazon also down 1.2%, 1.1%. stalling right at the underside of the 200-day moving average and 9 EMA. So you see the problem here, guys. These techs are very weak, and we're down today. Jabber 30, Apple was up, but it was only up 0.25%. That's almost nothing. So otherwise, trying to bounce from the symmetry target that we'd marked a couple weeks ago. Jabber 31, Google was also down 0.75%. It's in a little demand zone here. It's been holding this, but again, it was down. Jabber 32, Microsoft was actually up, but I say up, but it was up 0.04%, so it's essentially flat. Jabber 33, Meta was down 0.4%. Okay, so again, guys, the theme is the big cap tech stocks did not really participate in this rally yet. Okay, so that does it for the mega cap tech stocks. Like I said, they are lagging quite a bit. Here's the Russell, which outperformed, up 1.25% today. Nice rally off this demand support zone. Here added some fibs, and this one actually closed above its 9 EMA today. So 38% fibs right up around the 20-day moving average, and you got the 50% fib up there. I think we'll make it up to one of these areas, if not maybe even to the 200-day moving average or 50-day moving average. And Jabber 35, here's IWM 2-hour review. We had a nice little wedge coming into late last week with a MACD divergence, and this is playing out. Otherwise, one target would be this supply zone up here between 211 to 216. That's likely a target here over time. All right, guys, let's go ahead and move on. By the way, futures are down a little bit tonight. ES futures are down about 14 points. Moving on, Jabber 36, here's the VIX. So the VIX has been melting down. Remember, it was riding up the Bollinger Bands during this decline. You didn't get a big fear spike like you did in August of last year. I think we'll get that on the next wave C down after this wave B rally ends, but we didn't get it on this initial sell-off. Anyway, continues to work lower. In Jabber 37, here's the breadth indicator, the NYAD advanced decline versus the S&P. Now, you did have a higher low on the breadth indicator, so that's at least has been a positive, and that's helped the market bounce here short term. And finally, Jabber 38, here's the other breadth indicator. So this had finally got oversold last week. I remember I had commented that this had yet to get oversold. So it finally got oversold there, and we've had a nice bounce the last 2 days. You can see every time this indicator has gotten oversold, we've had nice market bounces. Oversold below the 0.4%. It's the ratio between the NY advanced decline to the NY total TOT. Next, Jabber 39, here's the 10-year Treasury yield, slightly down today. Kind of has a little wedge bear flag look to it for now. Jabber 40, here's TLT 20-year bonds. And Jabber 41, here's high yield corporate. High yield corporate was holding up really well, but finally started to leak oil. It's had this wedge pattern for a while. Broke that wedge last week. We're now back testing the other side of the wedge. So that could be resistance for a pullback from here. So let's keep an eye on that. Moving on to just a few sectors. I'm only going to cover a few of them. Here's XLK Technology. Was up today 0.7%, closing slightly above its 9 EMA. But like I said, most of the big cap FANG stocks were down. Jabber 43, semiconductors were up as well. So far, nice rally off that demand zone. Bigger resistance is above at this broken trend line. Previous support, now resistance. Jabber 44, XLF Financials bounced off that demand zone from last week. Closed right above the 9 EMA. Now let's see if this can make it up to the 50-day, 20-day moving averages above. Jabber 45, Utilities XOU is coiling very nicely. I commented last week that one could go long this, put a tight stop at that higher low, just around the 77 area inside the pattern. It's moved up. It hasn't broken out of here yet, but this is a nice pattern. One area that's really strong is the energy. Here's XLE. So in XLE, it's had some wild action here, but that pullback from that last high was a obvious ABC three-wave pullback. Okay, and you have a larger coil forming now. One of the energy stocks I really like longer term is the CVX. I'm not showing the weekly chart tonight, but it has a beautiful weekly. It's coming back here to resistance. And of course, the other world markets are very strong. EFA up today, made a new high. Remember, I added this to the high performance KISS system section. It's got very good stats. That's been long. Chart 49, here's the EFA SPY ratio. Like I said, the ratio up again yet today. Eventually, we're going to see a macro change here where EFA outperforms the S&P over the long term. It's underperformed the S&P since 2008. That's eventually going to change here. And chart 50 here is emerging markets to SPY. Same deal. This has been working nicely higher. Ratio is up 0.9% today. This indicator at the bottom is turning up. It hasn't crossed the red line yet, but I'm watching for that. So these two areas eventually, I think, will be areas to be overweight over the S&P. You know, for all these years, it's been better to be overweight the U.S. market, but that's eventually going to change here. Moving to commodities, chart 51, DBC up 0.7% today, tagging the underside of the 20-day, 50-day moving averages. Chart 52, DBC on the weekly, still stuck in this big range, of course. Chart 53, crude oil, came down to that September low last week. It held that for now, a little bounce today. But again, while crude oil has been in the dumps here, energy stocks are really holding up well, such as XLE ETF. Chart 54, UNG natural gas, been pulling back from the highs here, not surprising. The weather's been warming up, and natural gas usually does better under the cold weather. Chart 55, URA uranium, nice rally off this support demand zone. You also had a nice divergence at the low. I think uranium is going to be widely used more in energy, so I do like the uranium market longer term. Chart 56, Bitcoin, still chopping around here. Yes, it held that little demand zone a week ago, but still just chopping around here right around the 200-day moving average. Obviously, pretty good sell-off from that umbrella top that I pointed out back in February. Chart 57, Ethereum still in the dumps. This has had a heck of a sell-off from the December highs, over a 50% haircut, still below the 9 EMA. And here's the weekly chart. It did test that demand zone last week, bounced off of it, but man, this has had a heck of a haircut. Moving on, chart 59, US dollar. Really good sell-off from that supply zone. It's still around this demand zone. It's trying to bounce a little bit here. You got a little divergence. If the dollar starts to rally here, maybe that'll produce a pullback into precious metals. Chart 60, here's UUP. That's the ETF. I'm showing this because you have the 200-day moving average just below. Should just get a further sell-off. And you have a little demand zone below as well. Moving to precious metals, chart 61. Here's gold. Was up yet again today. Still over 3,000 an ounce, so this is played out. Remember, I've been targeting that. That said, we are setting up a bigger MACD divergence now, and the fact that the MACD had recycled quite a bit leads that this next divergence could set up a better high once it finally does. That we did have a little MACD divergence back there in February, but remember my comments before, when the MACD is too far above zero, divergence often fizzles out, and that's what it did. But we are setting up to a larger divergence. But ultimately, the precious metals have been the place to be. Chart 62, silver, little pullback today, but it's got this coil pattern. That pullback bounced right off that support trend line. I like silver longer term. In chart 63, here's SLV, silver ETF on the 60-minute time frame. Again, back in early March, I pointed out the inverse head and shoulder pattern, which played out. A little ABC pullback, rallied again, took out that resistance, became support. Still looks good. Chart 64, GDX, gold stocks. Last week I said they look like a cup and handle, and they broke out nicely the last several days. Look at these moves. Chart 65, GDXJ, that's the junior miner ETF, had also a cup and handle pattern. Really nice moves the last few days. One of the ideas I put out last week was BTG, BT Gold, up 9% today. So this was I put this out in my weekend newsletter over a week ago as an inverse head and shoulder pattern, flag pattern, and look at this sucker. Hope you bought it. Chart 7067 SIL, that's the Silver Miners ETF. That's also playing out. That's a way to play a move in the silver miners without owning the individual stocks. Chart 68 SLV, that's the silver ETF. Again, looks really good. Following up on some other names, Walmart, which I gave as a short a couple weeks ago, said to put a stop at that lower high. It's played out really well. Hopefully it took some profits before today. It got pretty close to the 200-day moving average there with some dojis. So finally bouncing back, but it was a great short. And here's the bigger picture view of Walmart. It had also bounced right off that 38% fib from the December 2023 low. So it was a logical area to expect a bounce on it. And chart 71, Intel, big up day, up 6.8%. This puppy was really basing since August. Look how many times it held that support. August, September, December, January, February, March. So it was a really strong support. I said at the time it was a good area to take a shot, and it's rallied up nicely. And here's the monthly chart. The other thing, Intel's been correcting, downtrending since 2021, but it had come all the way down to a monthly demand zone that went back to 2012 and 13. So to me, this seemed like a low risk area, and it's had a nice rally since. So hopefully some of you participated in that one. Anyway, guys, that'll do it. We'll see what happens tomorrow. Like I said, futures are down a little bit tonight, but we'll see how things fare tomorrow. And remember, Powell on Wednesday. Take care. Enjoy the rest of your evening. See ya this week.